Folks, it's the start of a new year, and I'm excited to kick it off discussing the ways we can supercharge Main Street and promote economic growth across our rural communities. This committee routinely looks at the integral role small businesses play in our economy and our lives, especially in our rural communities, where small businesses represent over 96% of all employers and provide nearly 57% of all jobs. I grew up on a farm in southwest Iowa and currently live in Red Oak. Still today, I know the local small business owners who run the stores and shops around me and experience firsthand how ingrained they are in our agricultural community. Not to mention the role of America's original small business owners, family farmers. After all, these are my neighbors and my friends. They carry on the spirit of entrepreneurship that runs deep throughout rural America. Despite the importance of these small businesses to rural agricultural communities, they have faced numerous challenges in securing affordable access to capital essential to their survival. The SBA's 7A loan program was established to help address some of those gaps. But under the Biden administration's mismanagement, we saw the opposite. The share of lending to rural small businesses declined year after year. The reason for the decline is no mystery. While the Biden administration was recklessly slashing lending standards and eligibility rules in the 7A program, it was building up regulatory hurdles in the private sector and ignoring the challenges faced by the small community banks that serve rural and agricultural entrepreneurs, including their challenges in utilizing the 7A program itself. Luckily, President Trump and SBA Administrator Loeffler have overseen a tremendous turnaround in lending to rural communities, with the dollar value of all 7A lending to rural small businesses in the first year of the new administration increasing by nearly 20% over last year. However, many rural community banks still find it incredibly difficult to fully and actively participate in the 7A loan program due to unnecessary red tape and overly complex requirements that do not account for the unique needs and operations of rural small businesses. Many community banks also worry that their inability to dedicate staff to SBA compliance will jeopardize their ability to rely on the 7A loan guarantee. This red tape shouldn't be what stands in the way of reaching borrowers who can benefit from 7A. That is why I called on Administrator Loeffler earlier this week to report to this committee on the resources and efforts the SBA has made to promote greater participation by rural community banks in SBA loan programs. I ask unanimous consent to enter into the record my January 9 letter requesting information from the SBA on its efforts to assist rural community banks. Without objection, so ordered. In the letter, I also asked what the SBA is doing in the new year to reduce compliance and paperwork burdens for rural community banks so they can reach more rural and agricultural small business owners. We must also do our part in the Senate. We made headway when the committee reported out my bipartisan bill with Senator Coons, the Made in America Manufacturing Finance Act, which will increase the SBA-backed loan limit from $5 million to $10 million for small manufacturers. A companion to our bill has passed the House of Representatives, so I do hope that we can get these loan limit increases enacted in the coming weeks. To complement the Ernst Coons bill, I also introduced my Modernizing Agricultural and Manufacturing Bonds Act, which will modernize IRS rules for rural development bonds. It is only through concerted, coordinated efforts and thoughtful legislation that we will be able to cut the red tape hampering community lenders and give our rural agricultural small businesses the room and capital to grow. I am grateful that we're joined today by our panel of witnesses. I look forward to hearing from them to see how we can help both rural entrepreneurs and the community banks that serve them. I now recognize Ranking Member Markey for his opening statement.
Yep, thank you, Madam Chair, very much. Because today we're here to talk about supporting local farms, grocery stores, food banks, other small businesses that make up the rural agricultural community economy in our country. And these small businesses are key to feeding local communities, creating jobs, building sustainable food systems. Unfortunately, the agricultural economy is being crushed by the Trump administration's attack on rural communities. In President Trump's playbook, MAGA really means making agriculture go awry. And we're seeing it as it cascades down onto the kitchen tables of people in America. Grocery costs are dramatically up over last year. Coffee's up 20%. Beef's up 16%. Bananas are up 6.5%. Food prices went up 3.1% in 2025 in the Trump administration. And Trump keeps saying that affordability is a fake word, but it's not a fake word for small businesses. It's not a fake word for consumers when something's up 3.1%. In fact, his agriculture strategy is bananas, okay, in terms of what he's doing all across the board, from tariffs to every other policy which he has. His tariffs threaten to bankrupt thousands of family farmers who are seeing their own prices increase and their exporting opportunities squeezed as other countries retaliate with tariffs of their own. President Trump's immigration policies are spreading fear in our neighborhoods and making it even harder for rural businesses and small farms to find hard-working employees, a longstanding issue in rural communities. And we cannot ignore President Trump's disastrous health care policies. With the passage of President Trump's big, ugly bill, hundreds of rural hospitals will likely close or cut services. Of the 22 million Americans who just saw a dramatic increase in their health insurance on January 1st, just 12 days ago, 10 million of them are small businesses, all work at small businesses, 10 million of the 22 million. And a lot of these farmers, you know, they belong to farmer co-ops, they're Rotarians, they're Kiwanis, they're the lifeblood of Main Street across rural America, and he's turning Main Street into Pain Street, you know, for these people. Healthcare, electricity, energy costs, food costs, all the way across the board. And it's just that the Republicans are just clueless, callous, and it's the cruel decision not to extend the Affordable Care Act, their enhanced tax credits. That's going to mean thousands of rural small businesses and their employees are going to see health care costs skyrocket. In fact, they are facing, in rural America, a 28% higher increase than those who live in cities. America was already struggling with climate change impacts, rising housing costs, retraining workers, finding a path forward for their small businesses when they decide to retire. But we have to address these issues, support our farmers, fishermen, ranchers in rural America, and not make it harder for them to exist. In Massachusetts, more than 7,000 small farms and thousands of small businesses support our local agricultural economy. These local producers lead the way in sustainable and innovative agriculture, cutting down greenhouse gas emissions, treating workers fairly, and feeding local communities and schools. If President Trump were serious about supporting rural communities, he would be investing in small local producers rather than prioritizing large multinational agricultural corporations that routinely violate workplace and environmental laws. And while creating a small business blight, President Trump is beefing up the pockets of his billionaire buddies. These corporations receive extreme favorable treatment from the largest buyer of goods and services in the world, the United States government, when it is small producers that are leading the way in creating local sustainable food systems. In fiscal year 2024, nearly $5 billion in food spending by the Department of Agriculture went to just 25 companies. Those aren't small farmers. And that's why I introduced the Effective Food Procurement Act, which would provide more federal contracting opportunities for small producers, small farmers that are using sustainable practices and treating employees fairly. It's important that we provide those pathways for small businesses inside of our food systems. Food is more than what we see on our plate. It is the labor of farmers and farm workers, the health of our environment, and the cornerstone of growth for many rural economies. So today, I look forward to hearing from our witnesses about how we can further our shared goals to help small businesses in the agricultural community. Thank you.
Great. Thank you, Ranking Member Markey. And again, I want to extend a warm welcome to all of our witnesses. And I am thankful that you all took time out of your busy schedules to come to Washington, D.C. to share your expertise on how we can improve America's rural agricultural economy. I will now introduce the two witnesses who are here today to testify on behalf of the majority. And first is Ms. Melissa Spurgin. She is from Albia, Iowa, and is the Chief Financial Officer of First Iowa State Bank, where she has worked for over 22 years. She previously served as Vice President of First Iowa State Bank. Ms. Spurgin holds a bachelor's degree from St. Ambrose University and an MBA from Capella University. And next, Mr. Jay Funke. Jay is from Edgewood, Iowa, and is the owner of Del Clay Farm Equipment, a family-owned farm equipment dealer business. Del Clay Farm Equipment has been in business for over 25 years and provides new and used farm equipment to farmers throughout Northeast Iowa. Mr. Funke holds a bachelor's degree from Loras College. And thank you again. I now recognize Ranking Member Markey to introduce his witnesses.
Thank you, Madam Chair. Mr. Erbin Crowell serves as Executive Director of the Neighboring Food Co-op Association, a cooperative federation of retail grocery co-ops across New England and New York State. He has nearly 3 decades of experience in cooperative business and food system development and serves on the boards of the National Cooperative Business Association and the New England Farmers Union. He lives with his family in rural Western Massachusetts. Ms. Moreira is the founder and board chair of World Farmers, which is based in Lancaster, Massachusetts. Her perspective as a farmer, a business owner, an immigrant has fueled her passion to advocate for small-scale farmers for over 45 years. She is also vice chair of the Rural Coalition Board of Directors and has served as Farm Service Agency County Committee Advisor for 9 years and was a member of the USDA Beginning Farmer and Rancher Advisory Committee. She's just been a leading voice in identifying and establishing market opportunities for ethnic crops and increasing access for culturally appropriate crops for immigrant and refugee communities. And we look forward to hearing from both of them.
Wonderful. Thank you, Ranking Member Markey. And briefly, I'll take a moment and explain the lighting system in front of you. There are 3 lights in front of you. Green means go. Yellow means you're running out of time. And red means please wrap it up quickly. I ask unanimous consent that the witnesses' full statements be included in the record. And without objection, so ordered. As your written testimony has been made part of the record, the committee asks that you limit your oral remarks to 5 minutes. And with that, Ms. Spurgin, you are recognized for 5 minutes for your testimony.
Thank you. Madam Chair, Ranking Member, and members of the committee, thank you for the opportunity to appear before you today. My name is Melissa Spurgin, and I am the Chief Financial Officer of First Iowa State Bank, where we serve rural communities across southern Iowa. I appear before you today on behalf of rural banks that underutilize SBA loan programs. Rural banks play a critical role in financing small enterprises. We rely heavily on local knowledge, longstanding relationships, and firsthand understanding of our communities, not just standardized financial metrics. Our limited use of SBA programs is not philosophical, it's structural. In many rural banks, a single lender may handle commercial, ag, and consumer lending, but SBA programs were largely designed for lenders with scale and specialized staff. SBA loans require significantly more documentation, certifications, and post-closing compliance than conventional loans, with lender staff requiring continuous training due to frequent rule changes. The departure of just one employee can eliminate a bank's SBA capability entirely. This is especially challenging because rural businesses typically need smaller loans, not multi-million-dollar financing. SBA underwriting and servicing costs, both in terms of compliance and staffing, are largely the same regardless of loan size or market area. So the economics often do not work for the small dollar loans most common in rural communities. Little weight is given to the judgment of experienced rural lenders with specific requirements around aspects of a loan like debt service coverage ratio, that do not account for seasonal or cyclical income patterns. This results in creditworthy businesses failing underwriting, not because they cannot repay, but because of timing mismatches in cash flow. Equity injection requirements similarly fail to reflect rural asset structures. Many rural businesses are asset-rich but cash-poor, with wealth tied up in land, equipment, or other assets accumulated over generations. Collateral and personal guarantee requirements also need greater flexibility. Rural assets are often inherited, jointly owned, or held in trusts. SBA collateral rules can require costly and time-consuming legal restructuring simply to pledge assets or obtain guarantees. Documentation alternatives should also be permitted for long-established rural businesses with informal but reliable operating histories. Community bank relationship knowledge should be recognized as a compensating factor in underwriting. Aligning SBA underwriting with rural economic realities would expand access, increase program utilization in rural markets, and do so without materially increasing default risk. These are flexibility improvements, not loosened standards. Rural banks also have significant concerns about the risk of technical default and guarantee clawbacks. SBA guarantees can be denied or reduced due to minor paperwork or procedural errors, even when the borrower performs as agreed. And rural banks typically lack the in-house SBA specialist or legal teams to manage this risk. A single denial of a guarantee can have a meaningful impact on a small bank's capital. In practice, the guarantee is only as reliable as the compliance process, and that process has proven unforgiving. As a result, rural banks continue to lend, but we do so outside SBA programs. We rely on portfolio loans, relationship-based underwriting, flexible renewals during downturns, faster credit decisions, and long-term customer support during economic stress. Rural banks are lending, but we are not able to reach every creditworthy rural entrepreneur without SBA support. Borrowers most affected are startups and those on the economic margins of rural communities. The path to greater rural bank participation is reducing friction in the system. I believe Congress and the SBA can better achieve the goals of supporting entrepreneurs and increasing access to capital in rural America by doing the following: easing the compliance burden and cost structure for smaller loans and for loans in rural areas, recognizing the value of the judgment and relationship knowledge of the community banker, providing flexibility and acceptable equity, collateral, and personal guarantee requirements and how they're documented, ensuring greater clarity so banks can truly rely on the SBA guarantee without risking a clawback on a technicality, and more effectively marketing resources such as the small business development centers to ensure both banks and borrowers understand what support exists. The SBA, with these reforms, can be better and more impactful partner with community banks in Iowa and across the country. We stand ready to be a partner in helping achieve this worthy goal. Thank you for the opportunity to share these perspectives, and I look forward to answering your questions.
Thank you, Ms. Spurgin. And is it Mr. Crowell or Crowell?
Either.
Okay, very easy. So thank you, Mr. Crowell. Go ahead and 5 minutes for your testimony.
Thank you, Chair Ernst, Ranking Member Markey, and members of the committee. Thank you for this opportunity to testify before you. We certainly appreciate your focus on this issue and the chance to discuss the role of cooperatives and credit unions in building thriving local economies and agricultural systems. My name is Erbin Crowell, and I serve as Executive Director of the neighboring Food Co-op Association. I'm also a board member of the National Cooperative Business Association and the New England Farmers Union. I have nearly 3 decades of experience in co-op and food system development, beginning as a member of Equal Exchange, a worker co-op based in West Bridgewater, Massachusetts. As the committee works to craft thoughtful policy, co-ops should continue to have a significant role in creating thriving local economies. I want to recommend the following improvements and key supports. First, providing access to capital through the SBA by crafting alternatives to current lending requirements for co-ops. Second, ensuring that a generation of small business and family farms are preserved through outreach and education on the cooperative business model. And third, ensuring that key support for cross-agency collaboration and technical assistance for co-ops is available through federal programs and initiatives. The Neighboring Food Co-op Association was founded in 2011 to support the growth and development of food co-ops in the Northeast U.S. And we also partner with local producers and other co-ops to strengthen the regional food system and economy. and collaborate with the NCBA and the New England Farmers Union on policy advocacy related to agriculture, food security, and co-ops and credit unions. Our region is home to many farm and fishery co-ops, worker co-ops, housing co-ops, and credit unions, as well as several utility co-ops. But food co-ops are particularly prevalent. There's 60 food co-ops operating 70 storefronts, locally owned by almost 300,000 people. These range from large multi-storefront retailers to small rural grocery stores. Our co-ops are focused not just on accessing healthy food, but sustaining jobs, strengthening food security, and providing markets for local producers, with a third of our sales being local products, and that's compared to about 2 to 5% in supermarkets. It's also important to note that half of all U.S. farmers are members of at least one cooperative. Co-ops tend to be multi-generational, maintaining crucial infrastructure and markets for their members and their communities. For example, 78% of agricultural co-ops are more than 50 years old, with Iowa, Texas, and California leading in the number of farmer co-ops. Without these enterprises, rural people would not be able to fully participate in the modern economy. Similarly, most of our food co-ops in the Northeast are in rural and underserved areas and have been in operation for decades. Several were founded during the Great Depression era, with a second wave in the 60s and 70s, and more startups opening in the past decade. An area where co-ops offer a solution is in business succession. Small businesses are the backbone of our communities, and yet we're in the middle of a watershed moment in Main Street America, where across our country, many small businesses owners are swiftly approaching retirement age. And the average age for farmers is 58 years old. So while some owners may choose to close or sell to an outside investor, a better option is to sell to a worker, producer, or consumer co-op. This ensures that the owner benefits financially and their legacy is preserved, along with access to goods and services that would otherwise be lost. In my own region, we have an example of Old Creamery Co-op, which is a rural grocery store that when their members decided to retire, they sold it to the people who loved it as much as they did, the people who shop there. We also have a worker co-op called Real Pickles that became owned by its workers over 10 years ago, preserving jobs in the community. Despite the demonstrated success, impact, and resilience of co-ops, an ongoing challenge continues to be access to capital and appropriate technical support. The shared ownership structure of co-ops makes them unable to access financing through SBA due to lending requirements that are not feasible for co-op businesses, and that can include hundreds or even thousands of member owners. During the COVID-19 pandemic, the personal guarantee policy was temporarily removed, with many positive outcomes for co-ops, including Real Pickles, which was able to not only maintain its business but grow 25% in revenue since the end of the pandemic. We also have a retail co-op, Franklin Community Co-op, which received a loan and has been able to not only grow but is now planning a major expansion. Unfortunately, we've seen a lot of changes and instability in the economy, and so we believe that by improving policies, SBA can help ensure that small business people, employees, farmers and ranchers, and especially young and beginning farmers, can harness the power of the co-op business model to address the urgent challenges and opportunities in our rural communities. For example, the Improving SBA Engagement Act, the Main Street 2.0 Act, and other opportunities to increase interagency collaboration. In summary, co-ops offer a time-tested, successful, and impactful tool for addressing the challenges we face in these unstable times. They have a track record of success, and they can grow and serve our communities better with some basic policy changes. So thank you again, Chair Ernst, Ranking Member Markey, members of the committee. We look forward to your questions. Thank you.
Yeah, thank you very much. And next we'll turn to Mr. Funke, and you are recognized for 5 minutes.
Thank you, Chair Ernst, Ranking Member Markey, distinguished members of the Small Business and Entrepreneurship Committee. Thank you for the opportunity to testify on current conditions of ag business and rural economy. I grew up on a family farm, attended Loras College, came back and have spent 45 years in ag business, 39 years in ownership in 2 different ag businesses in Edgewood, Iowa. Edgewood is a community in northeast Iowa with a current population of 904, and I since found out we're at 908, so we're growing. Our business community has been very active and been able to roll with the changes, working together as a community, supporting local businesses and a strong work ethic with continuity in ownership of businesses. I've been a member of the Iowa-Nebraska Equipment Dealers Association since 1992, serving 10 years as board member, chairman, and current position as past chairman. Like most members of rural communities, I have served on many committees and spent over 30 years on economic development in Edgewood. I've been around long enough to experience highs and lows in the ag business and our rural economy. As our farmers' income has dropped and the losses of around $200 an acre are common, the impacts can be felt in the small businesses supporting those farmers. Our association monitors our member dealers and reports large equipment sales are down 26.5% through October of 2025 versus 2024. The decrease in sales causes other problems. We have larger inventories than needed for the current sales volume, causing higher interest cost, which can lead dealers to dump inventory and take losses on equipment. Ultimately, this creates losses on the income statement that will be reflected on the balance sheet, and as that happens, we stop buying vehicles or replacing tools, cut advertising, and the list goes on. Rural small business owners all experience problems like these when the farmers they depend upon start to hurt. We have always offered financing to our customers, and the need today is greater than ever, with increasing equipment costs, making it harder for small farmers to afford the equipment. We do have a strong business community in Edgewood, but we have lost our Ford dealership, a restaurant, a realtor, and some other small businesses. It is important for rural America to keep these services alive. Otherwise, we will only continue to lose population to our larger cities. I truly believe rural communities are vital to this country and are a great place to raise a family. But if we are going to keep them and the small businesses in them alive, then they will need the support from Congress and the SBA. I want to thank Congress for the steps taken to extend the tax incentives to small businesses in the Big Beautiful Tax Bill. Small businesses pour most of their earnings into growing and improving their business. We do not see a return until we sell or allow the next generation to take over. I want to share some other thoughts to improve our ag business and our rural economy. Number one, encourage young entrepreneurs and give them the access to financing they need to get their business started or to take over businesses that their communities already rely on. We need to keep rural America operating and be able to support our farmers. Number two, invest and to support programs to improve and encourage businesses and people to stay in our rural communities, especially those communities under 10,000 people. In most cases, a lot of the basic infrastructure is in place or can easily be improved if we just offered the communities and small business owners the advice and support they need. Number three, although not in this community's jurisdiction, increased insurance support and stronger safety nets for our farmers would go a long way to helping rural communities they are a part of. Number four, fair and reciprocal trade requests from those countries we are purchasing goods and services from. My brother and I also farm our family farm, and we sell our corn to all three grain elevators in our community as they do business with us. I think every farmer would rather have markets for their products than rely on government payments, but we must make sure those markets treat us fairly and that our trading partners live up to the agreements they make with us. 1% of our population are farmers. They produce food for the rest of this great country and the world, and create thousands of jobs in their communities from all the support businesses required in their quest to feed the world. I am proud to be a farmer and an ag business supporting farmers. These are some ideas that I hope can be considered. I greatly appreciate this opportunity to testify to this committee and look forward to any additional conversation.
Thank you. And finally, Ms. Moreira, thank you.
Thank you, Madam Chair Ernest, Ranking Member Markey, and members of the committee. Thank you for the opportunity to offer testimony for today's hearing, Growing the Small Business Agriculture Economy. My name is Maria Moreira, and I am the founder and board chair of World Farmers, a nonprofit which currently provides access to land and technical assistance to 260 immigrant and refugee farmers in Massachusetts. I am also the vice chair of the board of Rural Coalition, a national coalition with more than 60 grassroots member organizations working to protect and sustain land, food in rural communities based here in Washington, D.C. In addition To the credentials you heard in my introduction, I come to you today with 45 years of experience in both creating and operating several successful food and farm businesses and supporting other farmers to build successful farming businesses in this country. World Farmers' founding mission is to support small-scale vegetable producers in accessing mainstream agricultural resources in developing strong, viable businesses through technical assistance in land access, production, and marketing. Through all my years of dedicated to this work, the last 5 years have been the most turbulent for farmers. Our farmers are aging. Our shifting climate is imposing and creating threats to farmers' operations. Our farm labor is ever fragile, and our land prices are ever changing markets posing threats while farmers continue to receive pennies on the dollar for their products. We are seeing businesses continue to consolidate across sectors, and their market models are not built to support new, beginning, small to medium-scale farmers. This has made it increasingly difficult for small family farms to sustain their operations, putting undue pressure on them to increase scale in an attempt to compete. We need to invest in our small to mid-sized farms if we want to see them not only survive, but thrive. A local agricultural sector stimulates job creation and supports economic activity among adjacent and neighboring businesses. And yet, individuals choosing to farm are dwindling, and farmers' children are first witness to the scarce profit margins of finding other jobs. In order to support the American people, we need to intentionally prioritize and build a food system that facilitates the development and growth of small to mid-scale agricultural businesses. One of the most impactful programs for facilitating the business growth among small and mid-scale farmers across the country was the COVID-era policy that channeled resources directly to farmers. And it did it in the most effective way possible, by purchasing their products. This program originated under the Trump administration, named as the Farmers to Families Food Box Program, and evolved into the Local Food Purchasing Assistance Program, known as LFPA. We have not witnessed another single program that has provided a similar level of direct financial impacts to small and mid-sized scale farmers. World Farmers was a contract holder for the first Farmers to Families Food Box Program, the first time that USDA Agricultural Marketing Service, AMS, had sourced diversified specialty crops from farmers. It was a big shift for the agency, although many people I know said that the bid process was not meant for small aggregators like World Farmers. We applied, and we were awarded the contract, recognizing the impact it would have for direct market farmers who did not know if their markets would operate during the pandemic. This program proved AMS's ability to source from small and mid-tier aggregators who prioritize local farmers of scale. It kept farmers afloat. The LFPA and LFPA Plus programs did similar things for farmers in Massachusetts. Of the $14.3 million invested in cooperative partners to implement the program, $11.3 million was for food purchases made with local farmers, fishermen, and producers. That's 80% of the total budget directly invested in farmers' products. These programs showcase the capacity and success of the mid-tier aggregators across the country in connecting with and advancing sales for small and mid-scale farmers, as well as AMS's ability to direct spending resources towards smaller producers. In another way, which USDA can invest in our nation's producers is through program outlined Effective Food Procurement Act, which we thank Senator Markey for developing and introducing. This bill would shift USDA's significant purchasing power to purchase from small to mid-sized producers, prioritizing local, sustainable, and just purchasing with our government contracts and sourcing. Just with the LFPA program, this would support farmers by creating a market for their products, recognizing the rising needs for farmers of all scales across the nation. We hope that USDA, either of their own accord or through congressional direction, will invest in our farmers. By investing in these programs, thank you for your time, consideration of these very important matters, and our support of growing the small business agriculture economy, and I'm ready for the questions when they come.
Wonderful. Thanks, Ms. Moreira. We will now move into questions and answers, and I'll now recognize myself for 5 minutes for questions. So we'll start with Ms. Spurgin. In your written testimony, you state that, quote, "The path to greater rural bank participation is reducing friction in the system," end quote. And on her first day in office, SBA Administrator Loeffler noted that one of her goals was to streamline and improve user experience. I know that significant process has been made, and I expect to see that continue under this administration. Can you walk us through the process you went through the last time you tried to utilize the 7A loan program and how it can be made easier to navigate through automation?
Yes, thank you for the question, Senator. Well, I will admit it has been 5 years since the last.
That's a problem.
Yes. Reason being, the last SBA loan that we did took 6 months to close. It was the purchase of an existing business that was so able to provide the historical data points, the historical financials. It was a very well-positioned business, so there's no reason it should have taken 6 months to close. And the other issue that we run into was the customer burnout, and I'm not sure that ever gets referenced just in regard to the back and forth that often happens between the SBA application portal and the lender and the customer. So it has been some time since we have actually used the portal, so I would be very anxious for the small business development centers and or local SBA offices to really start to reach out to local lenders and describe the improvements, because it will take turning the boat with small lenders that have experienced the frustrations within that system to start to try to reconsider using SBA programs.
So when you're describing that customer burnout, it is simply that it takes so long, they go back and forth between the portal or additional information.
Right. Or we submit something and then something else, we need some additional documentation of some kind or some additional projections. And so that constant customer thinks we're done, we've submitted it, we'll get a response, and then it's, oh, we need something else. We need something else. And that is a very long and can be a very stressful time frame for the customer.
Absolutely. No, thank you. I appreciate that. And Mr. Funke, last year, Congress passed the Working Families Tax Cut, which extended several small business tax breaks. And how will those tax cuts help your business this upcoming tax season? And what investments do you plan to make in your own business?
Thank you for the question, Senator Ernst. First off, the 20% deduction on qualified business income was very helpful. And for a small business where we are investing our profits back into our facilities, back into our people, back into our equipment, it's important to have that. In my own instance, the 100% bonus depreciation, along with the Section 179, was a great help to our business. December is the biggest month of the year for sales in the farm equipment businesses, and we were able to capitalize on that and had one of our best year ends. We're very fortunate. Yes, I talk about the farmers losing $200 an acre, but as you're familiar with, we are from more of a livestock-oriented farming in our
Northeast
location, and it's been very helpful to our business to minimize the reduction in our sales. So those two things have happened. And for the record, two guys that did buy big pieces of equipment at the end of the year, both moved it into 2026 business.
Yeah.
So the programs were good enough through the manufacturers that they did that. So, most of our sales at the end of the year were between $10,000 and $60,000. So, not big ticket items. We didn't sell any big tractors, a couple of combines, but that was about it. As far as ourselves, the investments we've made, our biggest one came a year ago when we opened up our addition onto our facility. We added 10,000 square foot of shop space onto our facility because our shop had been expanding, and that's one of the things we've worked very strongly for the last several years to expand our shop to be able to help our farmers and keep them up and operating in those times when they need us, in the spring and the fall in particular. And even right now, when they're in the winter, our livestock guys need that skid loader to run every day, and we're able to do that. But I've invested in crane hoists, many different pieces of equipment, replacing some vehicles and doing some of those things. And there'll be more, but I will tell you that in 2026, at this point, we're going to be very cautious moving forward because we don't know where this price of commodities is going to go, and it will trickle down and catch my livestock guys eventually.
Right, thank you. My time has expired, but just because we maybe have an audience and folks that may be viewing that don't understand the cost of the type of farm equipment that we are using in the Midwest, can you maybe just give the price of a combine for those that are listening or watching?
I hope you're all having fun with this one. So certain combines are in the $700,000 to $800,000 for the base unit, and then on top of that, if you're going to put a 12-row corn head on it, that'll run you someplace in $150,000 to $170,000. A 35-foot platform is going to run you well over $100,000. Now, my AGCO people with my Gleaner combines have done a really strong job in the trying to reduce the current inventory, and we actually sold brand-new combine for a true cash price of in the $430,000 range.
Yeah, so I just use that to demonstrate, and thank you, Mr. Funky. I just use that to demonstrate the cost associated with equipment in farming today through the Midwest. So thank you for humoring me. I now recognize Ranking Member Markey.
Yep, thank you, Madam Chair. In December, I introduced the Effective Food Procurement Act to fix our broken food federal contracting system. This bill would help more small, local producers that care about climate change and sustainability and worker fairness to get considered for federal purchasing opportunities. We just cannot continue to stick with the status quo of rewarding massive agricultural corporations that are willing to sacrifice worker safety and sustainability while leaving small farmers on the sidelines. Small farmers are like beggars at the banquet of federal subsidies. They don't get access to this funding. And federal contracting just shouldn't go to those same big companies again and again, almost like socialism that's built into our system where the biggest get the most every single time. If our government supports small businesses, we should practice what we preach. Public purchasing dollars should support the public good and lift up small producers. So, Ms. Moreira, what can be done to help small producers build sustainable food systems in their local communities, and how would the Effective Food Procurement Act help? You mentioned it in your opening statement.
First of all, it's all about the markets, access to the market.
Can you move the microphone over a little?
First of all, it's all about the access to the markets, okay? Farmers and ranchers across the nation strongly prefer investing to improve access to markets over direct farm subsidies, often accrue to most agribusiness and integrators. Opening the markets, existing markets, to localized family farm businesses and mid-tier aggregators who work with small farmers by leveraging current investment and shifting procurement practices through the Effective Food Procurement Act. It is a critical step which would adapt USDA's procurement practices to establish a pipeline for future dependable, stable markets for community-connected and family-operated farmers, simply by leveraging current investments and shifting procurement practice by USDA. That's all we're asking.
Yeah, thank you. And again, a subsidy program without access is an hallucination.
Also,
and that's where small farmers are in America. They're just over here in some hallucinatory state, hoping someday that out of the goodness and beneficence of the federal government that they'll stop just having socialized handouts to the biggest companies. So, Mr. Crowell, what is the role of cooperatives in supporting resilient, sustainable, and localized food supply chains?
Thank you, Senator, for your leadership on this issue, and particularly for including co-ops in this legislation. Certainly shifting federal purchasing priorities towards small and mid-sized family farms would make a big difference, and it's an effective investment in our rural communities and would expand markets. But particularly by including co-ops, it would also strengthen farmer-owned infrastructure in these communities, because these co-ops are owned and governed by their patrons or the users of the products and services. Their goal isn't to maximize profit, but to ensure that they can meet their members' needs over time, whether that's inputs, processing, or marketing and distribution. And that means that there's a built-in incentive for the cooperative to stay rooted in its community, to weather economic and environmental challenges, and invest in long-term infrastructure and impact. By procuring from co-ops, you're also benefiting not just one business, but all the members of that business, which in a farmer co-op can be in the tens or it can be in the thousands. So it's a very efficient investment in rural America.
So talk about then the issues around SBA lending and cooperatives.
Thank you. Yeah, as I mentioned, also I'll just mention briefly for food co-ops, we're very focused on local procurement. The average co-op purchases from 169 local farmers. But our growth is limited by personal guarantee requirements in SBA loans, the lack of technical support for people wanting to transition to the business model, understand what it means to be a member-owned co-op, and the lack of strong interagency collaboration. So those are the basic changes we'd like to see, many of which are already reflected in bipartisan legislation such as the Mainstream Employee Ownership Act.
Yeah, thank you. But again, legislation without passage is an hallucination, okay? So we have to work on a bipartisan basis to get them passed. Thank you, Madam Chair.
Yeah, thank you. I just want to mention it is a topic that we should be debating, the Effective Food Procurement Act. It has been referred to the Agricultural Committee. It is not under the purview of the Small Business Committee, but thank you, Senator Markey. And actually, Senator Husted, you are recognized for 5 minutes.
Thanks, Madam Chair. I've enjoyed the conversation and listening, having grown up in Ohio and in a farming community and watching the industry over the years and how innovation, technology, and globalization, all these things have affected it. I started to do a little math, having a little fun here with my AI partner as I was going through the economics of a family farm and reflecting on the estate tax debate that always goes on around farms. And I was thinking about a large family farm, 3,000 acres, row crops, wheat, corn, soybeans. I did the math on this at $10,000 an acre. That's a $30 million asset. But once you factor in average input costs and average yields and average net or price for what people would be yielding in those crops over this past 3 years, the estimate of the net profit would be $81,153 a year, which is great. It's a profit, but not much of one when you consider all the risk that's involved in that. But if you would have taken that same amount of value and invested in the S&P 500 this past year, it would have netted you $4.9 million and you could have sat home the whole time. So I guess I'm not making a case for farming, economically speaking, with that assessment, but I'm just trying to talk about how important it is that we have people who are willing to do this in our country to feed America and people around the world who don't have the ability to grow this kind of food, and how important the estate tax exemptions that we put in the bill and the Working Families Tax Cut Plan this year really were for that very example that I used. Because the tax bill for that, were it not there, and you wanted to pass it on to the next generation, would have been $12 million. And $12 million at an average net profit of $81,000 a year, it would take you 147 years to pay that tax bill. And so when we make policies here with family farms in mind, and we hear the rhetoric around the estate tax, it's just economics. People won't stay in the family farming business if they can't afford it. If they get charged a tax bill that they could never pay. And so, Ms. Spurgin, I appreciate you being here, and I'm glad that you brought my friend Adam along with you, as former Secretary of State. And but does that sound like the kind of people that are the customers in your bank and the kind of issues that they contemplate when they're making financial decisions?
Absolutely. And it's unfortunate that the piece that is considered when a family farm is going to transition is to sell the farm, and that's unfortunate.
And does what we did in the bill to help exempt them from that tax bill save family farms?
Yes, very much so. Thank you.
Well, I'm glad to know that, because I think it's a virtuous goal, and I'm glad that we were able to get that accomplished and sort of make the at least give a chance for the economics of this to work. You talked about in your testimony compliance burdens. Could you talk a little bit more about that as it relates to how you, like, give us a flavor, if you could, about that farmer, about that family farm. They come to you and they're looking for financing. Explain what that compliance burden means.
Yeah, so, at the very basic level, a lot of the requirements just on the at the very beginning in the application side, when you're talking about business plans, financial statements, projections, and especially for either young borrowers or even new entrepreneurs into a new business, that's really where we see the struggle is just having, they're all trying to do their work on a day-to-day basis, but then to have this additional burden of, not opposed to providing projections or providing any of that. It's the level of compliance that's required and the constant, what seems to be a constant back and forth between the application portal and getting with the customer and having them be able to set aside the time that's required to put this together. So that's what we see from the front end. Also, compliance issues related just simply around once an SBA loan is done, around the guarantee, where we have lived. Unfortunately, not all businesses remain as ongoing entities and have lived working through with SBA on the guarantee, and it is not an easy process. Something that you do at the very beginning that says you have a guarantee, and 5 years later, you unfortunately have to go back on that guarantee with SBA, and it is a very cumbersome process. Unfortunately, the lender that did the loan that we did 5 years ago, I asked him, I said, have you ever talked to anyone about an SBA loan? And he goes, I will never do one again. And it was a good business. It was a purchase. It wasn't even a startup. But again, just the time that it took to close the loan, 6 months. And the unfortunate side is the sellers of existing businesses, they've got to be willing to stay hooked with that buyer to be able to work through that time frame and that process. So thank you for the question.
Great, thank you.
Yeah, thank you. Senator Shaheen.
Thank you, Madam Chair. One of the things that I think is quite apparent listening to the testimony of all of our witnesses and the questions from you, Madam Chair, and the ranking member is that farming isn't the same all across the country. And when SBA or USDA tries to make rules that apply to farms, there's a really different ability for farmers to be able to benefit from those programs. And as Senator Markey pointed out, and the witnesses from Massachusetts have pointed out, farming in New England is a whole lot different than farming in Iowa. And in New Hampshire, we have a lot of small farms, a lot of organic farms, and they have not been able to take advantage of a lot of the programs that are more available for larger farms. And Mr. Crowell, you talked about the federal food programs that play an important role in providing a revenue stream for businesses and food producers. We've seen that in New Hampshire. We have one of the oldest food co-ops in the country. I'm sure you're aware of the Hanover Food Co-op, which I think is the second oldest in the country. And one of the things that's really helped That co-op and the one in Littleton, which is a smaller community, is the Local Food Purchase Assistance Cooperative Agreement Program that you mentioned, Ms. Moreira. And one of the challenges is that our federal agencies, like so much of our bureaucracy, don't talk to each other. And so if we want to promote small business farming, then we need to have SBA work with USDA. And what we saw with the LFPA program is that it was terminated back in March by USDA. And what we lost in New Hampshire was $2.7 million to purchase food from local farms. And while that doesn't sound like a lot if you're in Iowa or New York or California, that's a lot in New Hampshire. So can you talk, Mr. Crowell, about the consequences of the losses of this kind of federal funding for our small farms and what that means and how we should think about encouraging cooperative agreements between federal agencies to avoid this kind of problem in the future?
Yes, thank you, Senator Shaheen, and especially for your support of our family farmers and food co-ops in New Hampshire. As you mentioned, our farms in the Northeast are quite unique. They tend to be much smaller, much more diversified. They tend to be vulnerable to issues like climate change because they are in very narrow river valleys, and often the services coming from USDA aren't quite appropriate. I mean, they're easily addressed, I think, but it can be difficult for us. And certainly for our food co-ops working to sustain those local farms and prioritize them, the support of the government has been very valuable and obviously has a knock-on effect in our rural communities. One key support has been the Interagency Working Group on Cooperative Development, as you're aware, which has representation from across various departments and agencies. We've seen renewed efforts during this Congress for SBA and USDA to better cooperate, which would make a big difference for us, particularly on programs like disaster assistance. And I think that the lending programs coming through better collaboration through USDA and rural business cooperative services would make a world of difference for our region. Thank you.
Thank you. And just to follow up on that, Ms. Spurgin, you spoke eloquently about the challenges of what wait times do for all small businesses, but I think it's a particular problem for small family farms. And we've seen that, again, more with, especially with USDA and with some of the programs, the REAP program, which helps with energy costs, which in New England, as we know, is a big cost, and we are very affected by climate change. And what happens to a business? We have 4 farms in New Hampshire that have been waiting for more than a year for their REAP funding. What happens to small businesses and farms when they have to wait that long a time in order to know whether they're going to get the funding they need to go forward with the project?
Thank you for the question, Senator. My experience is they give up.
Yeah, which is, I think,
Fortunate.
sadly, what we see. And so thinking about how this committee can better work with, since I'm on Ag Approps, I can talk about the agriculture side, but how can we better work with the Agriculture Authorizing Committee to look at some of the challenges as we want to promote our small family farms? I hope that we can think about ways to do that. Thank you, Madam Chair.
Yes, thank you, Senator Shaheen. Senator Young.
Well, thank you, Chair, Ranking Member, for holding this hearing. I think it's been really important. I want to thank our witnesses for your testimony today. Great state of Indiana. We have a lot of farms, of course, associated with that, a lot of vibrant farm communities, and some that have lost some of their vibrancy over the years. One of the many challenges they're facing right now is they're dealing with a silver tsunami. This is not unique to farm country or to farm operations, but it can be especially acute in some of our rural communities. In fact, according to the U.S. Census Bureau, half of small businesses are owned by individuals who will reach retirement age within the next 10 years. When these farmers exit agriculture without a clear exit strategy, a clear succession plan, farms are often sold or consolidated, Young and beginning farmers face especially high barriers to entry, and rural communities lose jobs, lose population, and lose economic activity. Ms. Spurgin, what are the biggest barriers that young or first-generation entrepreneurs tend to face when trying to start a business or take over an existing farm or rural small business?
Thank you for the question, Senator. From my experience, that has been the cash down payment requirements. Specifically, within the SBA programs, it's at least a 10% cash down payment. A lot of what we look at with portfolio lending is the seller, or however they're transitioning out, that equity may be held, it would typically land, buildings, other equipment. So giving the borrower value for that equity versus having it be all cash.
There's some related challenges in the housing market that there have been some creative financial instruments that I know are being structured to try and address that. It's a little outside the scope of what I intend to ask about, but thank you. Are existing SBA loan programs, in your mind, flexible enough to help young farmers and entrepreneurs buy into established operations rather than starting from scratch?
In lieu of the cash down payment requirements, if it's an established business, I would say yes, just because the historical financials are there. So you're able to have some data to base your projections off of. But to start something from scratch, I hate to know the number of folks that wouldn't qualify simply from that.
Yeah, maybe that's something we take a look at, see if the SBA programs could accommodate that. I'm going to go ahead and open this up to Mr. Funke or our other witnesses. Do you have anything to add on this topic of succession planning and ways Congress maybe can soften the impact to this challenge?
Yes, I do. In fact, if you noticed in my bio, I listed that I'm only the sales manager there now. That's as I promoted my daughter to the general manager right before I left.
I see.
So
yeah.
That is a very important part. I am 67 years of age. I enjoy what I do. I'm not looking to get out just yet, but I also know that we need to keep the younger generation involved and get them up there and get them running. We have a small farm in today's world. We are farming roughly around 550 acres that my brother and I own, and then my two sons, JC and Matt, help me and my brother with that farming operation, and they just recently purchased 70 acres with help through the USDA, the FSA program, as beginning farmers. I've had them working with us in the last 10 years to help build up that, ability to do something like that. It is not something that you can do overnight. And the ability to start into farming or any small business is going to require the help of somebody that is willing to get them going, whether it's, in our business, you said 25 years. Del Clay started in 1974. And it actually goes back to 1947 when it was started by another individual. So
Mr. Funke, having just gone through this experience and being, fairly versed in it, you clearly took away, because you just shared it with us, that you can't start right as you're looking to retire, but were there program adjustments that you feel like would make it easier on people like yourself trying to make this transition to the next generation?
absolutely. For this next generation to get going in the correct manner, they need to have some skin in the game. And they need to be able to go out and borrow some money. If all their money is coming from dad or mom or their great uncle, that makes it more difficult to get these things going. But to Ms. Spurgeon's comment that 6 months is too long for these things to take, I've put together a lot of financing for farmers, and the urgency of getting these things done quickly through leasing, through longer-term financing with other lenders is very important.
We do have just a few minutes before we close, if the rest of you would like to add comment as well. Mr. Crowell?
Sure. Thank you. Yeah, this is another area of business succession that co-ops can play a key difference. but there's not the technical support out there from SBA to communicate to business owners that option, what it might look like, how to become a cooperative. We have examples of things like farm supply businesses, hardware stores that have converted to cooperative structures and therefore remained in the community. And then on the food co-op side, changing these personal guarantee requirements could free food co-ops to expand their purchases of local goods. As I mentioned, on average, food co-ops buy from 169 local producers. There are also often areas where new farmers can try new products. They're willing to experiment with new products and services. And you see many examples of co-ops that, local farmers that started just selling to their local food co-op and now are large businesses distributing, to major buyers.
Great.
And Ms. Moreira, did you have any comments?
Yes, I just wanted, before closing, to focus on the LFPA and the need for the LFPA program for small farmers. And during the last one, we serviced 500, we purchased, aggregated from 500 farmers, small farmers in Massachusetts and in New England. And the effects of the cancellation in March was devastating. Okay, in March, farmers had already purchased their seeds. They had already starting their seedlings. All of the planning for the season has already been done. They had already invested in all of the system of doing their crops this season. So finding a market at that point, they did grow the food. Finding a market was next to impossible. So we had we did the best we could. All farmers that were part of the program did the best they could, but crops were left in the field unsold. So that's really, really, really important for us to know how important that program still is, and how devastating the cancellation of it was. I could go on, but I think my time is up.
Thank you.
Thank you.
But yes, we appreciate the comments
ask one
today.
quick question, if I
Yeah,
may?
oh, of course.
No, if I may, yeah, thank you. Yeah, I went to the farm in Ireland that my grandmother had to leave because the succession program in Ireland was the oldest gets the farm and everyone else moves to America. So I went to the farm just to see, and this woman is like a twin of my mother, but my mother was, that part of the family, it was down the food chain, okay? So they all had to come to Boston. And a beautiful farm, I could see just that birth order might have changed my whole history in terms of what the secession plan was. And then my father was a milkman, so he took us up to Beverly Farms to see where the milk was, it came from the cows, and then he would be delivering the milk. So we moved to the retail side of farming, okay, in one generation. So that's my relationship with it. And Mr. Crowell, I'd just like to know, what did the cuts in the SNAP programs, Supplemental Nutrition Program, what impact did that have on small farmers across Massachusetts, but across New England and the country?
Yes, thank you for the question. I think really that the challenge around the cuts to SNAP benefits, obviously it has a deep impact on food security, particularly in rural areas. But it also has a knock-on effect, right? What it meant was people with limited incomes had less money to spend on healthy food and groceries, which means sales would go down for the food co-op, which meant that the co-op couldn't buy as much product from local farmers. So I think when we think about how these benefits impact not just individuals, families on limited incomes, we have to think about them more systemically as well and understand that they are part of a more sustainable and fair food system that can keep people well-fed and healthy over time.
Okay, great. Thank you, Madam Chair.
Well, again, I do want to thank our witnesses for being here today. I ask unanimous consent that the record of today's hearing remain open for 2 weeks for members to submit questions, revise and extend their remarks, and submit additional information into the record. Without objection, so ordered. And again, thank you very much for this important committee meeting today. And with that, the Committee on Small Business and Entrepreneurship stands adjourned. Thank you. Thanks, Ed. Nicely done.